Bitcoin has reached 24,000 US dollars upon the 25 basis point release from the Federal Reserve. We're going to discuss what this means today, so let's get into it. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're having a fantastic day. We're going to discuss Bitcoin today, talking about the $24,000 recent move, what it means for Bitcoin, and where Bitcoin is going to go next. We'll also take a look at the broader markets, the market data, and the short-term price action of Bitcoin to discuss these things further. Now, before we do get started, smash the like button, hit the comment button, subscribe to the channel guys. We do daily videos of Bitcoin, focusing on the technicals, the charts, and the data alone. If you are interested in joining our Telegram channel, I'd highly recommend it. It is the second or first link down below, You'll get access to all our charts, analysis, news events, educational posts, videos, and market data in here. If you are interested in trading, you can join our trading channel, which is our VIP trading channel. You get updates on exclusive altcoins. You get specific trades with very, very precise entries, exits, and targets. Everything is very much laid out for you guys. I'll show you an example over here. Targets, entries, stop loss, everything is laid out. You can see, for example, over here, entries, targets, stop loss. Okay, look at our Bitcoin buying plan from our VIP guys. We bought, this is back from 14th of June 2022. We bought at 16,500, 18,000, 20,000, 21,000. Some big profits coming in from our spot bags. So go ahead and contact me if you're interested in joining that. Otherwise, let's get into today's video. Our market data, guys, let's get into it. 3.17% for Bitcoin up in February. We're up 55% in the last 24 hours for the volatility increasing, which is definitely expected as we have news releases. Over $100 billion in trading volume. Liquidations have jumped up 127% for the last 24 hours to 133 million. Most of those liquidations occurring upon that FOMC data release or around that point, as you can see on the charts over here. More importantly, guys, look at all of those liquidations. A lot of those liquidations coming from shorts as people try to short the FOMC data release and try to short that rally up to 24,000 on the way up, which again, who knows why we were doing that. We're in resistance, I guess. But you know, trading FOMC, guys, trading news events is never a smart idea. I've been saying this entire time. Trading FOMC particularly is one of the least beneficial trading environments you can be in. Not only is the data you need to make decisions released only at the specific time that the Federal Reserve decides to be released, meaning you can't revise the data prior to release, meaning you have to make quick decisions, which facilitates emotional trading, but certain people can get access to this data 10, 15, 20 seconds prior to you, and they can manipulate the market. And that's why we generally see prior to FOMC coming out, we see a lot of fluctuations in the price, a lot of manipulation going on in the market before that data release. So you're playing a PvE game, or should I say a player game right there, against people who have that, not only have more money than you, but also have more influence, and they have that data before you guys. So it's never a good environment to trade in. Highly stressed to only trading there with very small amounts, or if you want to gamble, go ahead. But if you're trading seriously, you should be avoiding news releases. As you can see, look how many liquidations occurred. Anyway, guys, let's get into market data and the traditional markets. So, looking at this, the DXY, guys, we have fallen to the 101 level, actually breaking below it. As you already know, guys, that is a very key level for us to remain above if we do want to see any sort of pullbacks in the markets, particularly on the larger time frame. You can see that on the daily chart over here, we've just closed below the 101.3. Our next major support, guys, is going to be 101, which we're currently under. I'd really like to see a bounce upwards here on the daily chart for the DXY. Otherwise, we could potentially see a continuation downwards. Now, this is something to keep in mind, guys. We are in a weakening downtrend on the DXY. Just like Bitcoin, when we have these sloped downtrends like this, we have decreasing volatility, decreasing volume, and more importantly, guys, decreasing momentum. We generally see reversals. So I'm not saying the DXY is going to rise upwards. There's a lot more to what influences the DXY than just technicals. But if this was a Bitcoin chart here, I'd be looking to expect some sort of reversal at some point. And that's definitely what I expect on the DXY here. We are looking for some degree of a bounce. Bounce zones are as follows. Again, we are looking for 102. That would be the trigger to push us upwards to these gray zones again. So 104, 105. But until then, guys, the downtrend is very, very strong for the DXY. If we do lose this level, we could potentially be falling sub 100. So definitely keep that in mind. Looking at the Dow Jones and S&P 500, no massive progress has been made. The Dow Jones has actually developed a downward trending resistance on the chart over here. It looks like we are developing a symmetrical triangle pattern. Now, symmetrical triangle patterns are neutral patterns, but when we enter a symmetrical triangle from the downside up, we generally follow that momentum through. So the symmetrical triangle pattern is actually suggesting a bullish consolidation within this range between 33,000 and 34,400. Again, looking for the break upwards and clear of these local highs to trigger that continuation toward the upside. Otherwise, a breakdown will more indefinitely result in 32,000 again. Looking at the S&P 500, we have done a similar thing, but we have broken out of that major resistance. Again, not too significant on the daily chart. We're really looking for that on the weekly chart, as this is a larger time frame chart here. We do have a day and 19 hours to close, okay? So the momentum in the markets here for the S&P 500 is starting to build up. The strength is starting to build up. It is definitely starting to look better, particularly above this level. When will the S&P 500 look really bullish, guys? It is going to look really bullish above here. Imagine this range here being the equivalent resistance of Bitcoin at that 22,600 to 24,300. This is the equivalent resistance Bitcoin is currently testing, okay? So this is technically a reversal occurring out of the downtrend, okay? A macro uptrend will occur over here, similarly to Bitcoin, where we have a breakout of our reversal structure. This is our reversal, a macro uptrend occurs over here. So like I said already, guys, from yesterday's video, we do generally see Bitcoin front run the markets because it is generally a higher risk asset. It has a higher beta, and as you can see, the direct correlation between crypto and stocks, we generally see assets with higher risk generally also have higher return, and therefore they are usually more volatile. If they're more volatile, they're more susceptible to narratives. In this instance, the pivot is coming as the interest rates have been dropping, and therefore is more likely to rally faster and more aggressively than stocks, which is exactly what we have seen. So that doesn't mean the resistance levels aren't equivalent. This is the equivalent resistance for where Bitcoin is. So currently the S&P 500 has broken outwards and it is in a reversal structure. Okay, will the reversal result in an uptrend? We only know that above 4,300. Moving on, guys, let's take a look at bond yields. Bond yields have actually rejected from the falling wedge. Again, this is something very interesting because technically we are coming closer to apex here. If the bond yields do actually break out at any point, we could result in a uptrend again. Otherwise, a breakdown will be very bearish, losing this low. Breaking down here will be incredibly bearish for DXY. It will most indefinitely drop lower, and that, in my opinion, will be the confirmation that we are going to be entering macro uptrends on both Bitcoin and the DXY when that occurs. Looking for a break upwards here, we still do have hope for the bears. The bears definitely still have hope. I don't think the bears have hope to see sub $10,000, but I think short-term pullbacks, potentially larger time frame pullbacks that don't result in new lows, are still technically possible until we clear this level over here. So I guess that's it, guys. Let's talk about Bitcoin now. Let's discuss what has happened. Let's discuss what this means on a macro chart, and then we'll get into the short term. So what we have seen, guys, already, we've seen a nice little strong rally up on Bitcoin in the FOMC release. It was looking bad. Bitcoin was looking bad. There's no doubt about that. Bitcoin has been losing strength, losing momentum, losing volatility, losing buying pressure for the last 3 weeks, okay? We even saw a pretty significant crash 2-3 days ago. I think it was 3 days ago now, taking us back down to retest the lower support. As I said yesterday, it doesn't matter how the technicals are looking. It doesn't matter how the charts are looking. News events throw all of that data quite literally out the window. The price action can completely change direction. The narrative completely shifts when news events come out. Okay, so we have seen a rally upwards, but that doesn't disregard or doesn't change the fact that Bitcoin is still technically in resistance and is still technically looking weak here. Technically, guys, until Bitcoin breaks through this resistance range, the macro reversal is not complete. This is a macro reversal, okay? Well, we have completed the macro reversal to hit our macro reversal target, which was this local top over here of the falling wedge structure. Okay, 1, 2, that's our falling wedge structure over here. Okay, 5 points of breakout. That was our retest point. That was our target right over here, 22,600. So technically, the reversal has actually completed as per the falling wedge structure, as per what our measured move is for the first initial target. But it hasn't developed into a macro uptrend. Now, you're probably thinking, Whale, why are you saying this still? You must be a perma bear. Well, just to reiterate, guys, we bought Bitcoin 16,500 at 18,000. We haven't sold. We're very bullish. I'm incredibly bullish on Bitcoin, but I can distinguish between long-term outlook and short-term outlook. Just because a short-term outlook still looks weak, and we have the potential to crash in the short term and create a level of which we could find support and go back upwards, it doesn't mean the macro is looking bad. The macro is still looking phenomenal. As we have talked about many times, guys, particularly in a 4-year cycle, even this chart over here has suggested the bottom is in, the macro looks great. And we'll come back to that in a second. But the short term is still looking weak, guys. We are at resistance, we are losing momentum, we are losing strength, we're losing volatility, we are compressing, we are consolidating, we are at resistance, so we haven't broken upwards. It is not looking ideal. Until we get that weekly close above this level, I would not be expecting any sort of rally upwards. However, if we do get the weekly close above here, it will be a confirmation that we have developed a macro uptrend. We have cleared this local high, we have cleared that local high here. We will be pushing upwards to $28,000 to $30,000, which will be our confirmation of a retest of the yearly low, potentially triggering a bull run. Let's talk about that now, and we'll get into the short term. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you could do so with the link in the description. Thanks for listening. So why is that level so important? If we look at prior data here, this is a 4-year cycle. I want you to take a look at the thick red lines on the side. I'll go ahead and circle them really quickly so you can just draw your attention to them a little bit faster. Thick red lines on the side, they correspond to these yearly low levels, okay? Look at prior cycles. We dropped through the yearly low. Once we dropped through our yearly low, we inevitably found a bottom at some point, okay? We found a bottom. Very straightforward stuff. Once we close a monthly candle back above that red line, we never actually close a monthly candle below it again. Even in the COVID 2020 crash, we didn't close a monthly candle below it. What does that tell us? It tells us once we reclaim a monthly candle over that yearly low, we have entered a we've entered a strong uptrend market. Okay, so in what we would call a bull market. The bull market does take time to gain momentum, speed, and strength, but that's really when the bull market starts. The initial phases of the bull market really kicks off. So looking at that on Bitcoin, that will be sitting around 28 to 30,000. Now, according to the 4-year cycle, we don't expect that to occur right now. If we look at prior years, we have seen that occur from bottom to that monthly close. We have seen it 5 months after the bottom. We have seen it 10 months after the bottom. Let's say on average we're going to see 5 to 10 months. That will put us in between April to September. We'd expect a break over 29 to 30,000. So even according to the 4-year cycle date and trend range, breaking upwards here and going into and above $30,000 straight away within the next 5 months is quite unlikely. It's possible, it's quite unlikely. A break upwards through this level could result in a continuation to this level without a breakout. That is also something to consider. So let's take a look at the 4-year cycle again. If we do look for a bull market, we're looking for not only a break of that $30,000 level, which will trigger a bull market, but we're also looking for a break and monthly close above the baseline of the Ichimoku cloud. You can see this thin red trend line moving through a price action over here. I'll map it out. You can see every time we close a monthly candle above, that is when we actually initiate a bull market. That is when the price moves aggressively upwards for the remainder of that 18 to 19 month period. So that is when the bull market will start. Moving back to this chart, like I said already, just because we expect a short-term pullback, it doesn't mean we're not bullish. The macro is very bullish. This chart actually tells us the bottom is already in. And again, this is not new news. We've been expecting the bottom to be in for quite some time now. But this chart shows us every single time we see the baseline on the 2-week chart cross over and down below for Ichimoku cloud, we print a bottom. we print a bottom, we print a bottom. Every single time we see a baseline cross back above the clouds over here, we enter that bull market, and that is represented by that monthly chart right over here again. So it's all corresponds, it all says the same thing. Let's go ahead and take a look at the shorter time frame and discuss this price action and more importantly, where we can go for Bitcoin. So on the smaller time frame, guys, it definitely looks like we have found resistance at that level, a perfect rejection currently. Again, nothing too surprising. In fact, a level we shorted this morning. But again, it is resistance until it is not. So therefore, right now, we do have to expect this to be resistance, and any sort of reversal and rejection from here has to be taken with consideration. What we are developing here is some degree of a uptrending resistance. Let's go ahead and bring up our RSI to see if we can see any discrepancies in this resistance. Currently, we do have decreasing momentum still, guys, and rising price action. Once more, telling you guys we have a bearish divergence. So even though we've seen this rally back upwards, we still have decreasing strength. This is still decreasing momentum. This trend into this range, in this resistance, is still weakening. It is not something we're looking to be overly bullish on yet, okay? For the short term, I would still expect if we reject from this level and we don't close above it, we will be continuing downwards through this range, looking again, 22,600, 23,300, 21,500, 20,800, 20,100, and 19,500 as targets if we do reject, guys. Keep your eyes on this chart. It's going to be very, very telling for the next few days. If we do break a weekly candle above here, the narrative is going to shift. We'll talk about that when it occurs. The uptrend will, on the macro chart, actually be confirmed. Until then, this reversal structure is nothing more than a reversal structure that is at resistance, and it is weakening at this resistance. While price action is at resistance and weakening, the probability of rejection massively increases, okay? So until that rejection and until that resistance breaks, we do have to be cautious for a pullback. Whilst we see momentum drop, whilst we see volume drop, whilst we see volatility drop in this range, we do have to expect that pullback is still likely, okay, guys? I'm going to leave the video, guys. If you've got any questions, leave them down below. I hope to see you guys tomorrow for our next video. Cheers.